Very good morning to you all. It's an absolute pleasure to be with you. Really nice to see some familiar faces over here. We're going to have, as a last gasp attempt, an end to this year to set us up for next year. I think that next year is going to be exciting. There are lots of opportunities that we're already seeing emerging in the marketplace. And I'm going to give you some real value today, hopefully. David, nice to have you with us. Ryan, I can see, always busy in the car. Anthony, studiously in the library. I saw, who did I see over here that arrived? Very, very interesting business. Oh, there's Paula. Hi, Paula. Nice to see you. Very nice to see you as well. Thank you so much for joining us. Really good to have you with us. Mbuyu, I'm so pleased to see you here. You have such a fortunate, exciting business to be involved in. The ability to see whether people are swallowing diamonds or not swallowing diamonds. That was the history behind the business that you run and lead today. So welcome everybody. Please mute your mics, switch on your cameras. I would love to make this a human event. I'm going to be working hard. I'm going to be asking you to play along with me, engage with me. Let's open up the chat, and any questions you have, please send through the chat. I'm going to take around 40 odd minutes quickly to go through a couple of concepts that will underpin the engagement that follows on. I have in front of me all the issues that were raised by those of you who did on the registration forms, and I will be assured of addressing them. So to get going, a very quick introduction. My name is Pavlo Phitidis. It is a privileged mouthful. I wish it was something like Jack Black, something simpler, something easier. And I'm so envious of some of you over there. But it is a name that defines me. It was given to me by my parents. I'm a founder of Aurik, an investor. I've written a book or two, and I speak a fair amount. Very quickly, 3 points about Aurik. We are a growth service that works with SME business owners. We define an SME as a business typically doing above 700,000 odd pounds a year, up to about 17 to 20 odd million pounds a year. The way we started, in order to learn what we do before we could create a service to offer what we want to do and what we do, is we ourselves started, built, and sold 12 businesses. We were very fortunate that over the 9-year period, we only had 2 failures. We had 2 listings on the stock exchange, 3 management buyouts, and 5 sales to corporate entities that were looking to acquire innovation and growth. But what was most interesting is that the last handful of businesses took half the time and about a third of the investment to build to the same value as the first handful. And from that, from 1 to 12, we started to identify a pattern of activities that made the building, growing, and scaling process more systematic, more structured, and therefore more implementable. And that's what I'll be sharing with you. We have been deeply fortunate and privileged to have worked with over 2,700 SMEs in the United Kingdom, in the United States, in Europe, 2 in Singapore, 3 in Hong Kong, and some in South Africa. And through that, we are very fortunate to have maintained a consistent annual compound growth rate for our clients in turnover of around 29.8%. Today, I'm going to rush through an analogy with you. I'm going to talk to 5 growth impediments, which are the 5 levers of value in a business and the 5 levers of opportunity, move through to Q&A, and I'm going to be looking for active engagement. Once again, thank you for joining us. Let's get going. Building a business, here's the analogy, is no different to sailing a ship. If you think about the logic of it, and the reason, incidentally, that analogies are so valuable is because they give you a perspective, a separation from the daily grind and the daily activities you're involved in establishing, building, and growing your own business. So analogies can be extremely powerful if they're well applied. I use it frequently in looking at our own business and that of my clients. With a ship, you set sail from somewhere to arrive elsewhere. a destination is crucial. Most of us started our businesses or emerged in our businesses in the early stages, either driven through necessity or opportunity. The focus has largely been around generating cash flow and income to sustain the business, but also sustain ourselves and our families. And yet, that destination always only is a year away, or 2 years away, or 3 years away. We seldom define it very clearly. As you set sail from any place or space, if the destination is not clear, you can't chart your course. If you can't chart your course, you don't know how much food, fuel, and water you need to arrive there safely. If it's a 10-day journey out at sea, you're going to be taking 13, 14 days worth of food, fuel, and water. That starting point is as important as the end destination. The second thing is that every ship has a crew. As we have teams in our businesses, a crew on a ship understands exactly what to do, when to do, whether the sailing be steady and easy, or whether we be sailing through storms. All crew operate systems that integrate together in order to create a safe, viable journey. And then the last part that I want to share in the analogy, as captains of our ship, we find ourselves in one of two places. Either the engine room, where you have to be in order to haul the coal, to drive those engines and turn the propeller. It's what gives the ship forward momentum. Or we find ourselves up on the bridge, where you have a 360-degree view, you have a series of dashboards, you are in control of navigation and therefore direction of the propulsion generated by the engine room. And if you're lucky and well organized enough up on the bridge, you will have an espresso machine too. So it's an analogy we're going to be working with. My first question to you, and I'd like to run this through a poll, is what are you looking to achieve in the next 36 to 60 months? What destination are you yourself sailing towards? Are you looking to grow and dominate your market, the segment that you're playing in, the segment that you're operating in? Are you looking to build and grow and exit in order to go and retire, preferably in a place that has a lot of sunlight? Are you looking to succeed ownership and responsibility of the business to the next generation in the business? And that doesn't only apply to family businesses. In the services sector, it's mostly how one exits a business. But what are your personal goals when you, in your business, leading your business as captain of that ship? What is that destination you believe you are sailing to in the next 36 to 60 months? And I can already hear a debate emerging that might well say, well, it's impossible to know because things are so uncertain. Here's the reality. We are all sailing in the same sea. The storm is equally tempestuous for us all. So within your sector, within your industry, your competitors too are feeling the same environment that you're feeling. A captain of a ship says, yes, the sea is rough. Yes, it's uncomfortable, but I am sailing to New York. That is where I've set the destination. It might arrive there differently. I might take a different path, but I am focused intently on arriving at New York. So, wow, we have an ambitious group of us. That's fantastic. I'm so thrilled to see that more than 80% of us, just on 80% of us, are looking to grow and dominate our markets. Those folks are looking to grow, exit, and retire. I'm going to talk about the formula to get that right. If you think about it, we spend 10, 15, 20, 30 years building our businesses, and mostly exits globally in the SME space take between 30 to 60 hours to conclude and negotiate. If the end point is that exit, the way we build our businesses needs to change as of today, despite of the fact whether the exit is a year down the line, 3 years down the line, or 5 years down the line. If we're looking to build, grow, and dominate our market space, the way we build our businesses will be similarly aligned to how we build a business for exit. With that in place, a lead generation system. How do you build it, delegate it, and manage it? I want to share a quick story with you. A baker that we work with, an industrial baker, 54 years of age, steps into the environment with Aurik and says, I am done. I have been working in the business since the age of 30. I started the business. I've done well for myself. I'm generating in and around 5-6 million pounds a year. 54 years of age, in the prime of his economic life. So I asked the obvious question, why? Why now? Why exit now? And he said, Pavlo, for 2 years, we've been trying to exit for the right value. We weren't able to. We did some interesting work with this bakery. He was involved in a number of different market segments. We reduced it to one market segment, the hospitality sector. He focused in on the hospitality sector and became one of the leading continental breakfast outsourced suppliers through simply creating a set of systems aligned to a positioning that specialized on the hospitality sector. And let me talk to the early stage story of how this took place. The first thing we set about doing was agreeing a proper definition for the destination. If you think about it, as an operator of a business and as an owner of a business, you're both a director and a shareholder. And as a shareholder, the question mark should really be, well, how are you investing your time and what return are you hoping to procure? It's no different to acquiring a share on the stock exchange. You identify a share, you put £50 into buying the share, and over 3 to 5 years, you want 3 outcomes. The first outcome is over 3 years, you hope to be able to sell the share, which means it needs to be tradable. You hope that you can sell it for £100. The £50 profit is your capital gain. And you hope over the 3 years that you hold this share, you're earning £5–10 of dividends on an annual basis. That's your income growth. That's how we sensibly invest. It is how we should be investing our time as well as our money, and it's how we should be turning our sacrifice into an eventual return, because it really does take a sacrifice to build, grow, and dominate in a market. We believe that every business should have only one destination. We refer to the destination as an asset of value, and it has 5 layers to it, completely interlinked, completely integrated, that will yield the asset features of capital growth, income growth, and tradability for you as a business owner. The first is that the business needs to have a brand, and a brand needs to be independent of any one person. The system of the business and what it does in itself needs to be an experience that's deeply felt by customers and clients. Brand. Once you've understood what the brand positioning of your business is, how you locate yourself in a competitive environment, you want to deliver the business through a series of activities that we refer to as systems. Marketing to generate new leads, right in the conversation we had. Sales to convert those leads. Operations to fulfill those leads. Administration to administer the leads. Once you have the systems that articulate the brand, you can then get the right people to do the right thing at the right time. A purposeful team. Those 3 elements, integrated, aligned, and tied in together, release time, the most precious thing we all have available, for us to focus on next level growth, and thereafter secure an exciting value as well as a probable exit. I'm going to talk through each of these layers now. A question to start though. What makes your business special in the eyes of your customers? And I think we should run a poll on this, Pippa. This ship that you're looking at was one of the first ships to sail from Holland to the United States. It was in the very, very early 1800s as immigrants were migrating from Holland to the United States. If you look at how the ship positioned itself to all those passengers, it created a figurehead. And that particular figurehead, the picture, the shape, the symbol of a lion, communicated a very, very clear message. A lion is brave, a lion is bold, a lion is formidable. Crossing the Atlantic on that ship by sail was a very scary journey. The captain of the ship understood how to create confidence simply through a symbol, or in other words, a brand, within the context of the passengers that he was looking to fill his ship within for every journey. So we've got product or service features sitting at 27%, your service 36%, relationships 27%, quality, well, I really like that, and I suspect I know where that one came from, at 9%. Let's talk about those propositions, because what we are seeing globally is the way that we define what makes our businesses special, and quite honestly, the way we are taught about how to define our businesses isn't necessarily working. If you look at brand positioning, it's a competitive ocean we are sailing in. There are many, many players out there. And I think the future is only going to become increasingly more competitive for the SME sector. People will find economic opportunity in the establishment of businesses. The establishment of businesses is going to be easier and easier and easier. And already across the United Kingdom, there are 12.1 million .co.uk websites. It excludes the .io, the .co. It excludes all the .coms. It is a competitive space. And the big question is, how do you stand apart? If you're looking to build, grow, and dominate your segment, how do you stand apart? So the best of us out there were taught the following. We were taught initially by this man first, 1771, Ralph Waldo Emerson, a founding father of the United States, an essayist, a deep thinker, wrote, if you build a better mousetrap, in other words, a product, the world will beat a path to your door. And in 1771, he was right. There were very, very few products out there. If you had a product and it worked and it functioned, you were already in the game. As competition grew, this man over here understood that besides a good product, you need to have the right price on the product. Henry Ford was quoted as saying, you can have any Model T Ford you want, for so long as it was only one color, correct, black. He designed and developed the assembly production line in order to bring down the cost of the product that he had created and built. And pricing became a competitive advantage for some time. That was up until the late 50s and early 60s. At that point in time, the father of advertising, globally renowned as the father of advertising, appeared. Philip Kotler, alive and well and kicking today still. And he turned around and said, besides having a good product and besides having the right price, you need to understand who you serve. And he spoke about segmenting your market. If you look at all of us on screen, arguably we are classified as SMEs. At least that's how we are classified by government, by the big institutions of banking, the insurance sector, the telecommunications, tech sector. The big five in all those sectors see us as one segment, SME segments. And my question to all of you is, how happy are you with your bank? I know that I'm sitting with a thumbs down. I am simply a segment called SME. The bank doesn't necessarily understand me. They don't understand my business. They don't understand the levers of value. They don't understand my circumstances. I'm simply an SME. So whilst Philip Kotler was right in the early 60s and late 50s, and it gave rise to segmentation as a means with which to separate yourself from your competitors, we over the last 7 to 8 years have not seen that working very well across the businesses we work with. What we're noticing is that unless you have, yes, a good product with the right price, and unless you know who you serve, if you cannot define the segment you serve in terms of a problem you solve, you are not going to feature as being relevant in the lives of your customers or clients. There is no such thing as a luxury product or a luxury service. If you think about yourselves in your personal capacity, or if you think within your own business, the only time you spend money on something is if it solves a problem for you. We worked with a watch retailer, 2008, 2009, selling 50 to 150,000 pound watches. You know that thing on your wrist that tells the time? His business crashed, and he argued to me, Pavlo, I'm in the luxury market. 6 weeks on, once we have understood what problem he solves, he realized he was not in the luxury market. He realized that he was serving A, investors, B, collectors, C, no judgment here, but money launderers too. The ability to buy a recognized brand at 100,000 pounds and trade it the very next day through an auction was washing money. As he understood what problems he solved, it put him in a position where he could dramatically adjust his lead generation marketing campaigns to resonate with the audiences in the segments that he served, with the view to have them feel heard, understood, and therefore trust that he could solve a known or unknown need that they had. That's been working exceptionally well for the last 7 years, but it's not where the edge of competition lies. Over the last 3.5 to 4 years, what we have noticed is businesses that have positioned themselves, yes, with the good product, yes, with the good price, yes, by understanding what segment they serve, but defining the segment in terms of the problem they solve, have further gone and done so by creating a great experience. You have a splitting headache. What's the experience you want in having that problem removed? A crack at the back of your head? Well, it might well work because a lot of us nowadays are full of nonsense. But perhaps a tablet that you take that slides down your throat without a crack at the back of your head equally does a good job. In getting a problem solved, if you create a bad experience, that experience gets spoken about and amplified widely. We live in a stage of social media. People have access, and they have access to collective groups of people. And creating the right experience, a frictionless experience, in having a problem solved for a customer or a client is where the edge of competition is, and it's where we see extensive growth take place. So once we've understood the segments that we serve, and once we've understood the problems that they experience, which ought to be similar, but the experiences they want in having them solved ought to be different. If you, for example, have clients in property management businesses, the way they behave is fundamentally different to clients in construction management. A property developer and a facilities manager have very different requirements. They're governed by different regulations, they have different concerns around occupational safety and health, and therefore they procure differently. They look to feel understood and heard. And through that, the communication to them, expressing what you do and how you can be of value to them, arguably needs to be fundamentally different. If you're selling services into the residential market, as opposed to the business market, fundamentally people behave differently in those instances. And then yet again, in the residential market, those that live in wealthier suburbs and neighborhoods behave and procure very differently to those who live in less wealthy environments. We argue that once you've understood how you're positioning yourself in the various segments that you choose to offer a solution to a problem with, the experience must be articulated through business systems. And we have a number of them. Marketing to generate leads, sales to convert leads, operations to fulfill your promise to the leads. A system, as we define it in an asset of value, is made up of 6 features. They're activities in a sequence that can be measured, and most importantly, they can be taught. And most importantly, they can be defined clearly in a job description and can be attached and allocated a remuneration model. In many ways, if you have a marketing system that's optimized to communicate across the different groups or segments that you are serving, and it integrates and works neatly and coordinates with the sales cog that receives the inquiries and takes those inquiries through a journey of sale and closure, to fulfillment where you deliver the service and organize your teams if you're running projects, or the way that you present the service and organize the work in progress milestones of that particular service to create a fantastic experience. Operations drives the ultimate experience post-transaction. If they work together and integrate well together, operations can see what's coming down the line from marketing. Activities in a sequence that can be measured. The marketing campaigns can be measured. At the end of every month, you can see the inquiries coming through, allowing you already to accommodate the lead closure period, in other words, the sales time, to capacitate your team to begin and be ready to deliver. If they integrate well into sales, sales knows how to engage clients, when to engage clients, and which proposition is best suited to clients, because that's what a good marketing system provides for sales. And through that, operations understands how to manage and administer their capacity. Those three gears and cogs working together in an integrated single system is what creates the propulsion. It's the essence of what delivers on your promise, making up the brand that people understood you to stand for and to be. Quick question. There he is, Charlie Chaplin, a complete innovator in his own time. How many times do you feel you get pulled into the operational activities of your business? Are there crises in how you generate the leads and you need to rescue that side of the business, that part of the business? When leads come in, are your clients and customers effectively dealt with? Are they taken through a sales process that converts them into clients? Is it done consistently? Bearing in mind that we're looking at the experience that needs to be created. And that experience itself needs to be absolutely predictable. And it needs to be forecastable. You're wanting to find yourself in a situation where you know marketing works consistently to generate, let's say, 50 leads a month. Sales works consistently and reliably to convert of those 50, 5 new clients a month. And when that happens, operations works seamlessly in order to deliver at the spec and expectation established between yourself and your customer or client through either a physical or expected contract. So marketing's becoming, without a doubt, one of the tougher parts of business globally. We have a crisis in social media. Television has become fragmented. Print has been literally obliterated. How do we do it? It's a big, big question that's arising, and I think it's going to amplify even further next year. Sales to convert leads, maybe that's where the service comes in. If the service is delivered by your hand, can you arguably say that your business, independently of you, will offer that level of service consistently? Operations. I have a sense there are two gentlemen with us here today that struggle with operations, and it's completely understandable, especially if the operations need to be serviced and delivered by skilled artisans. If you have teams operating around the country, teams need to be kept as busy as one would in a table manufacturing business have a lathe that needs to be kept busy. An idle team is a cash drain on a business. So to coordinate and integrate your lead generation capabilities, align it to sales conversion, and then ensure you have enough capacity in a team to be kept constantly busy is essential in creating the profitability that will yield the valuations you hope to have. We'll talk about how to get that resolved. So here we sit. We understand how to position our business. We recognize there are many competitors out there. We have a good sense of who we serve. We understand what problem we solve for them. The problem definitions might be slightly different. The experience they need in order to learn about us will be dramatically different. The engagement in sales and ultimately the delivery of the final service will become increasingly more similar. We've understood and interpreted our brand in that definition. We then built systems to articulate and deliver that consistently and reliably. And now, for the first time, we can start to actively recruit right, capacitate right, and get performance right. If I were to put a question to you, who is your dream employee right now? Who would you want to step in and solve a problem for you? Would it be centered in lead generation? Would it be centered in administration? On the chat, what are your thoughts? What are your views? Ryan, who would you want? Who's that missing silver bullet? Anthony, who would you want? Lead generation and conversion from Paula. So true. It's very, very true. If you could find someone, I'm guessing, Paula, that you are excellent at being able to deliver the solution. And it's interesting because to the extent that we have expertise in delivering the solution that underpins the sector or industry we're in, it's where most of us start. We start with a skill, we start with a technical capability, we start with a passion for fixing the thing that we believe our business can solve. The activities of marketing and sales are profoundly commercial. Without them, our ability to express our technical skills are limited. Sales and quality technicians, absolutely right. Quality. You've built your business on the back of those words. And the understanding that sits behind it means you need consistency. Jobs need to be done right the first time, all the time. That's where predictability comes into play. The operational delivery of your promise to a client has to be absolutely predictable each and every time. So let's just talk a little bit about team. I think finding the right people to do the right thing at the right time and ensuring that is arguably one of the single biggest challenges. So besides lead generation and conversion, getting clients on board and customers on board, how do you get your team to perform absolutely predictably too? My argument is this: if you don't know who you serve, you can't define what problem you solve. If in looking at the problems you solve for the groups of people you serve, if those groups aren't well understood, psychometrically, emotionally, mentally, physically, what I call a customer dynamic, you don't know how to ideally create the right experience for them to learn about you, to engage with you, and then to be serviced by you. Once you have that right, you have the ability to build systems to deliver that. Activities in a sequence that can be measured, that can be taught, ascribed in a job description, and remunerated. If your business operates with systems, you're not looking to employ people to do a job for you. You're looking to employ people to operate the systems that will deliver on that proposition to your clients and create the experience in solving their problems. When you last looked at a CV to employ somebody, I don't know what your experience was, folks, but mine was, I looked at the CV and I saw someone who was the most remarkable, gifted human being I'd ever come across. They had a range of skills. Their values extended from here to high heaven. In fact, they could probably and ought to have built the base station on Mars for Elon Musk. And then we sit and we have an engagement. We have a number of conversations. And all we want is someone who can either generate leads for us or convert leads for us or service the leads we have brought on. Whereas if you have a system for which you are employing somebody to operate and run for you, you then have the opportunity to evaluate that person based on their values, chemistry, and fit with the culture of your organization. because asking about the activities and evaluating whether that individual is suited to perform those activities becomes a far more manageable, tangible, easier task. Once somebody is employed onto a system, if the fit is right, what we have found over time is this. You employ me to generate leads for you. You have ascribed how you generate leads in a system of activities in a sequence that can be measured. I look at the activities and I can see myself performing them. I can see myself enabling that entire system. If the match is good and I perform that system for your business and I achieve my target of 50 new leads a month, it builds my confidence. And as my confidence builds, I do more of it. Because I do more of it, I get better at it. And I take the 50 leads to 60 leads a month. I see that I'm doing really well in the system. I understand what the remaining systems are for sales conversion and lead delivery and fulfillment. I start to understand the greater role of my person and work ethic in providing value across the company. I understand my role in the team. And through that, I flourish because success builds confidence, and confidence builds more confidence, which leads to meaning and value. The way to create a purposeful team is to ensure you have the right people doing the right thing at the right time. If that match has gotten right, it starts to build consistency right through the brand. Some of you operate through a number of different locations, whether it be in the south of the country, the east in the country, or the north of the country. A brand is a feeling that customers universally experience as the same similar said feeling. If you want to get consistency of that experience, it's impossible to organize without systems. We work with a number of companies that operate through multiple locations. In the retail space, in the services space, when those locations are spread far and wide, it's the system within the location as to how leads are generated, how leads are converted, and how leads are fulfilled, that when consistently applied, sees a team in those locations applying the systems, which they in themselves create a consistent brand experience. I want to run a calculation. Quick question to all of you in the chat. How long have you been doing what you've been doing? How long have you been in the game of your sector and your industry? In years, how long? I shudder to tell you how long I've been doing this. Ryan, 11 years. James, 8 years. David, 5 years. Yes, but David, you were doing things before. You were doing things before. I saw you exercising with your daughter in that video that you posted. You definitely have been in the game for longer than 5 years. Mate, that I do know. Lloyd, 18 years. Yako, you're very, very specific. You have an engineering background, 4.5 years. 10 plus years, Paula. If we work around 180 to 200 hours a week, the typical experience of a business owner, calculate the years you've been at it. By 11 months, let's argue that 1 month is taken off through a combination of a few holidays and public holidays and bank holidays. So the number of years times 200 hours times 11 months will tell you how long you've been in the game. Let me help you out. 5 years is a 12,000 hour gig. Paula, where were you? You were sitting, was it 13 plus years? So you're sitting in and around 35,000 hours.
It was 10
Malcolm
years.
Gladwell. No, you've got the computer running, do you? Malcolm Gladwell argued that you need 10,000 hours to become expert at something. My next question to you is, what would you pay an expert consultant in your area of work on an hourly basis. £50 an hour, £300 an hour. Take the number of hours you've been working, calculate it by that expert rate, and you will come to a number. As a business owner, we need to keep our eyes on those numbers as they grow. As a business owner, we earn our income both by way of salary and by dividend. The balance and the shortfall ought to be seen in the capital value of our business when we exit. Time is the most precious commodity in the world. It can never be gotten back. As a business owner, where are you spending your time? Are you mostly in the engine room to generate propulsion? In other words, to keep the business going, to chunk out the sales, to deliver on the sales? Or are you mostly on the bridge? Where is that time being invested? The view that we certainly hold when you're creating a business built into an asset is that you should be spending 70% of your time on the bridge of your ship and 30% of the time in operations. It ought to have shifted slightly for this year. When COVID came and the lockdowns followed on suit, immediately what it did need was a battle plan to recover and preserve and recoup the business. It meant that if you were in more strategic orientated elements of the business, you had to get back down to your team. Practical operational leadership was vital for the first 6 months post-lockdown. Ultimately, we should all be sitting with the 70-30 split. And how do we spend our time as a business owner, as a CEO, as a shareholder, with 70% of it on the business, not in the business? Part of it should be focused on building the right culture. While systems integrated and coordinated will deliver your proposition, they are dead and inert without a purposeful team. People are emotional. Creating a culture of values that guides the right behavior emotively with the activities guiding the effort is how you create an absolutely well-honed system of delivery. That should give your business organic growth rates, 15, 20, 30% a year, whatever you feel is an appropriate organic growth rate. 30% of your time should be focused on next level growth. We talk from an Aurik point of view about a yawn. The rate of growth in turnover must exceed the pace in the rate of growth of cost. And I'll give you a case study on what that means in exacting terms. And then finally, a third of your time should be focused on innovation. And innovation is interesting because it does not mean technology. It means in how you adjust your marketing campaigns. With COVID as it came, the status quo, and therefore the experiences and problem sets for everybody globally changed. To the extent that you did not adjust your engagement methods with your clients and customers, that you did not make adjustments in the product and service that you offer, meant in its own right, you were hoping what led to your success pre-COVID is what will continue to lead to your success post-COVID. And yet we live in a dramatically different world. Innovation can be around a technique, a method. It can be about how you organize your teams. It can be around route mapping. It can be around how you run your campaigns. It can be around the training content that you provide your teams. It does not necessarily have to be a patent earning activity set. If we're not constantly innovating, it means we are not being fed by the friction in the experience that we see from our clients and customers, because removing that friction is where the innovation activity should be led and driven by. I want to share a quick example of a business. And I know that this business is relevant to certainly two of you on the screen. We work with a construction firm, 46 years old, the business owner, 14 years, having built his own construction firm. He was a general residential construction firm. He kept on going through boom-bust cycles, working hard to earn new projects, and then frantically trying to deliver on the projects. The fixed cost overhead was constant as a run rate. The only way to reduce it when times were leaner was to let go of skilled artisans in his teams. As he had done that and marketing had picked up, he now had to find the talent in order to deliver on the construction work. It was a boom-bust cycle and he was beyond exhausted. In working with us over a 3-year period, we immediately simplified the business and narrowed the business in terms of its speciality. He opted to go for the establishment and construction of loft rooms. Now, loft rooms aren't needed right across the residential landscape. Some homes are built with it in. A lot of homes are not built with it in at all. In understanding how a loft room solved a problem, for example, the sandwich generation, where middle-income folk are finding themselves in a situation where, because jobs are harder to come by, because property prices have increased dramatically, kids are staying longer and living longer with their parents. In instances where parents who have older parents need more care and are bringing them into the home in order to care for them, homes needed more space. The cost of acquiring a new home, the cost of moving a home was inordinate. The opportunity to extend the home and create additional space is a problem that solves both the sandwich generation in looking after their kids, as well as looking after their elder parents. Those homes are centered around particular suburbs and particular neighborhoods and particular income brackets. The message demonstrates to the buyers of the loft rooms, you hear me, you understand me, you know what it is that I need, and you're providing a solution to my problem. The experience that needs to be created over there would see a loft room established in a very short period of time. People continue to live in the property as the property itself is being built and the loft room is being erected. So the ability to protect the livelihoods and the habitat of the incumbent residents whilst establishing and building the loft room was paramount importance. The ability to do that fast and quickly required this client to establish a well-versed procurement and supply chain. It meant that he would limit the number of designs that were offered. It meant that the entire process, from inquiry to conversion and thereafter delivery, had to be shortened by simplifying the proposition by way of a simplified product with a simplified supply chain and with simplified teams. In getting that right, the attention then turned to marketing. And marketing of the service was designed around a product proposition. Knowing which suburbs to go into, which neighborhoods to go into, was the first instance. Stretching it beyond that into the estate agency framework was the next channel to acquire new clients and customers. The activities in a sequence that could be measured to generate the leads was simple, clean, and clear. The activities in a sequence that could be measured to convert those leads was simple, clean, and clear. It's the nature of a fixed product, although it's experienced as a bespoke, customized service. The activities to forecast the impact of marketing and lead engagement allowed for teams to be optimized in terms of capacity. The activity of marketing allowed for forecasting on procurement. Raw materials were always in play, for there's no faster way to lose money than when on a job, the tools, the equipment, the skills, and the raw materials are not available to when a promise to a client has been made for start and end within a 2-week period of time. As a consequence, the business grew. It grew at rapid rate in a short period of time from 2.8 million pounds of revenue to 4.2, over a 24-month period. The impact also saw a growth in the profitability of the business. The net profit before tax, or EBITDA, numbers grew by 6.2%, and that meant that the growth of turnover started to separate from the growth in costs. It created that crocodile yawn or a hippo yawn. It's the ultimate demonstration of scale, and its impact on valuation is profound. To give you a sense, that particular business increased its saleable value by somewhere between 600,000 to 900,000 pounds alone. A simplified business made it profoundly easier. How does valuation work? There are two methods globally, only two methods. And it's important that we all understand as business owners, surely, what these two methods are. Can you guess them? This one here is no different to this one here. It's called hope for the best. The other is that you can construct your valuation. If you determine that you want to exit over a period of time for a sum of money to quantify the value, you can mathematically create that value by building your business through 5 levers. If I offer you those levers, what would that be worth to you? So let's just think of the concept of a lever. A lever is something that you have control over and you can pull in your favor. For so long as we're in a situation where we're sitting with 70% of our time on the business, working across the landscape of clients and customers we serve, across our team, either close by or far from us, our job as a business owner should surely be to have control over those levers. Because once we have enough income coming in, our attention and focus needs to be on yielding capital value in that business. Globally, here are the stats. 94.6% of businesses started failed to sell. I'm not talking about startup fledgling businesses. I'm talking about established businesses. These are the business owners who are in their 40s, 50s, 60s. These are the individuals who've been in the game for 10, 15, 20, 30, 35, 40 years. These are the individuals who have earned really good income from their businesses. And 60, 70,000 hours later, with all the attention focused on income generation, they did not meet the requirements of an asset. And through that, 94.6% of them failed to sell. I got some incredible stats out of Australia 2.5 weeks ago. An economic survey was done by the Australian government. They looked at the mid-tier SME sector. It's a 119-page detailed report with lots of statistics all over the place. The conclusion was that 97.2% of established mid-tier SMEs in Australia failed to sell. They were looking at the closure rates as a means of measure. In succession, 27.3% globally moved from one generation to the next, the founding generation to the first generation successfully. After that, it's dismal. So let's just think for a moment. How does valuation work? More or less, valuation works on a 2 multiple of your EBITDA number, the net profit before tax number. It varies ever so slightly from one sector to the next. But within the SME segment, it mostly works on a 2 times EBITDA number. If I'm knocking on your door today, my process of negotiating that number down works as follows. The first thing I say to you is, Jacko, what makes your business special? If you show me a great product, I know immediately that out of necessity, competitors will have an equally good product soon. If you tell me its price, I know out of necessity that your competitors will have the right price soon. If you tell me its service, I'm immediately looking to see what your hand is in ensuring that service each and every time. If you tell me that you work with corporate entities in the financial services sector, that in itself gives me no real definition, for there are many competitors who service that sector too. In the instance you can define 3 or 4 groups of clients or customers you work with in terms of the problems they have, and you can quantify the problem itself and demonstrate how your product or service solves that problem for them at a price below the cost of that problem. I know that you understand your clients tightly, neatly, and I know that you have a value proposition that's enviable. If you can further demonstrate that you've understood for the 3 different groups of clients that you serve, that you've understood the 3 different experiences they need to learn about you in marketing, to become clients in sales, and to be serviced in fulfillment and operations, I know that you distinguish yourself through an experience in solving a problem rather than what 95% of your competitors are doing, demonstrating a great product or a great price or this vague definition of service. The next thing I asked you was, how does it happen? If you can show me that you have an articulated set of systems, activities in a sequence that can be measured, with job descriptions, with training to support the enablement of those activities, and with remuneration packages, and those words are translated into evidence, where you have a business manual as to how your business functions, I know that the system set delivers on that proposition. I then ask you, well, who does it? If the systems deliver it, who enables the systems? And if you can show me a team of system operators who have historically performed in operating their system sets, because their performance is measurable, their activities are predictable, and through that there's consistency in the performance of their duties and function of work within the organization, I know that that business can operate without you. To the extent that that drives pedestrian or organic growth, I then look to see where the growth comes into play. And if you can demonstrate to me that with the time you spend on the business, you've identified either new products or services or new market segments that leverage and build on your proposition, your system of delivery, and your team, so that when you implement that, new revenues coming in to lift your revenue growth rate, but moderate your cost of service and delivery. I know that this is a profitable business, and the future growth will reflect the historic growth. And then I ask you the toughest question of all. If you are not there, will this continue? And because you have a well-defined business, operating with systems, with an engaged team that has driven growth for you, independently of you, the impact on valuation does this. Your 2 multiple sees an additional multiple added to 3, 3 becomes 4, all the way through to a 7. If your profit before tax numbers were running at £1 million, the difference between a business sold for £2 million as opposed to one sold for £7 million is articulated and supported through this argument. Sadly, the reverse is true. If you can't show me that you're special and you're ho-hum with many, many other competitors out there, if you can't show me that you have a system of delivery that can operate without your hand, either in leadership or guidance or activity itself, if you can't show me a team that is well articulated and has a clear sense of what they ought to be doing, when they need to be doing it, and how they need to be doing it, if you can't show me a team that's more committed to the business than you, does it mean that when you leave, the team leaves with you? If you can't show me growth preceding valuation, why would I forecast growth thereafter? When businesses get bought for £1, it's because those features are not demonstrated. The 94.6% of businesses that fail to sell fall into that buying and valuation argument. I want to end off very quickly. Today, you've got momentum, you've got a team, you have got increasingly more and more and more and more hours behind you. And you want more. That was evidence. Build, grow, and dominate my sector. Tomorrow you have an asset of value, you have more growth, you have more profit, but most importantly, more time. We work with you to turn that into that through a very, very simple engagement process. We meet and greet to have a more meaningful conversation around your business. We look to understand where you want to go in the next 3 to 5 years. We look to understand the challenges that every business would face if it is driven to grow. And we look to see that we can be of value in working with you to close those gaps. We reduce it to a proposal. And if the proposal makes sense, we then go one step further, where we engage again for you to experience how we would work with you to turn the promises made in the proposal, indicated by that first meet and greet meeting, into evidence and reality. How do we make it all tangible? And once we have gotten through those 3 stages, and we believe that we can be of value to each other, because we as a business rely on the growth of our clients to grow ourselves, we proceed and we start. And with that, I'd like to close off on the presentation with 2 last thoughts. The first is, your job as a business owner is not to do the work. You need to build a system that makes the business operate independently of you. To the extent that you are invested and involved in operational activities to either generate leads, to convert leads, or to service and deliver to your leads. It means you are the business. To the extent that you are able to create a system that arrives at, it means you're the investor in your own business. The last piece of thinking I'd like to share with you, what I'm amazed at with Brexit is the profound lack of insight as to the building trauma across all the ports. We need 50,000 trained customs officials. Right now, we're sitting in a situation where we have 2,500. The program of training is intensive, and we are far behind. I'm working extensively with freight forwarders, and they are witnessing long, long lines of trucks stuck waiting. They're witnessing massive backlogs. In the pet food industry, panic has been raised already around, will there be sufficient pet food until we can unclog the impending blockages at our ports? I think we're in for a very bumpy next 6 months. And as business owners, we need to make a choice. Do we remain in our harbors? Do we send our crews home? Do we batten down the hatches and hope for the best and wait for the storm to pass? Or do we go out there, sail into that storm, and test the hull of our ship, test our crew's capability, test our skills to sail effectively in stormy waters? Because what I do know is this: the storm will pass. And if we are way ahead of our competitors who only then start leaving port, not only will we find ourselves more relevant to customers and clients, but we will be on the front foot. It means we'll be operating in a market with a few fewer competitors, and of those that exist, they're busy playing catch up. There's an opportunity to really make up the growth. I'm going to